This is the Investing Iguana with breaking financial news that could shape your next investment move. Temasek's Mapletree Investments has just bounced back into profit, posting $227.2 million for the year ended March 31st, 2025. Even more impressive, their assets under management have hit a record $80.3 billion, up 3.6% from last year. For Singaporeans tracking local market giants, this is a major turnaround after last year's loss and signals renewed strength in one of the region's most influential property players. Let's dive into the details. Mapletree's recurring profit after tax and minority interest came in at $637.4 million for the year, while overall revenue dipped as $2.2 billion. Mainly because of the deconsolidation of Mapletree Logistics Trust, the group's core business actually grew. Excluding that one-off, revenue was up 1.2%. The company also unlocks $897 million by selling off non-core assets and syndicating some of its private trusts. What's driving this? Mapletree is doubling down on its core sectors: logistics, student housing, office, and data centers. These areas saw focused investment, operational upgrades, and new projects, especially in markets with strong growth potential. So, what does this mean for you as a Singaporean investor or property watcher? First, Mapletree's renewed focus on logistics and accommodation is timely. The group expanded its logistics portfolio in Europe and the UK to $2.2 billion and is launching a new Asia logistics fund targeting Malaysia, India, and Vietnam, where demand for quality facilities is high. In student housing, Mapletree's $1 billion acquisition in the UK and Germany now makes it the fourth largest student housing owner in the UK. For those invested in Mapletree's Singapore-listed REITs or considering exposure to property funds, this signals greater stability and potential returns, especially as the group's development pipeline has also grown to $5.5 billion. Looking ahead, Mapletree's CEO says the company will keep prioritizing operational performance and selective investments in growth markets. They're also eyeing new opportunities in data centers across Asia and Europe, with projects in Japan, Korea, and Hong Kong already in the pipeline. For Singaporeans, this means Mapletree's performance could continue to support local REITs, CPF-linked investments, and even the broader property market. Keep an eye out for updates on new fund launches and asset acquisitions, as these could present fresh opportunities or risks in the months ahead.